how are you then thinking of getting good value in the current market? So you mentioned money's cheap, right? And it seems like, as one example, anyone who says they're doing something remotely related to an electric vehicle is getting crazy valuations, seemingly crazy valuations. So how are you thinking about trying to figure out, okay, what's, I don't know, for example, maybe a good one to talk about, right? So you guys just mentioned like automotive power amp, interesting company doing something in the battery management space. How are you trying to figure out what's a legitimate, realistic valuation for a company like this, and where's our entry point?
Yeah. So in terms of entry point, we've actually evolved a little bit from focusing on seed and Series A in the early years of Hella when I wasn't there yet, right, at Hella Ventures, to, I would say Series A typically now through Series C. So we've gone later stage. And there's a couple of reasons for that. One big one is that it's just, if you look at the collaboration between the company and Hella, it tends to work a lot better when there's, when the tech is further along and developed, when there's a team in place that can actually handle, kind of the what I call project management aspect of working with a big corporate like that. But yeah, in terms of entry point, we look at it very similarly to other VCs. We obviously don't love high valuations, right? But if the valuation is high and we think it can go higher, again, like that, it's a case by case analysis. It depends on where we think a startup could go. It depends on traction that they already have. We tend to not, like to invest in hype cycles. And you mentioned the electrification hype cycle. At the same time, there are always these opportunities where it's too early to say, but maybe at some point we're going to say, okay, that back then was a diamond in the rough and we found it. Mobility is funny, is a funny space, because for a long time, most VCs were not really interested in doing a lot of these and making a lot of, the CapEx intensive investments. Hardware companies, that was not really something that a lot of VCs were looking at for the longest time. And then Tesla happened, right? If you had asked most VCs at the time that Tesla was actually getting started, they would have just, probably told you, well, so you're telling me that in an industry where there's all these like big players and there hasn't been basically a new OEM really ever, right? Since like the early 1900s. Yeah. You're telling me that there's this company now and they're going to revolutionize it all and they're going to produce it at massive scale one day and like make more money and get there, and are able to manage to raise, the billions of dollars that it takes to actually get to that point, right? That is not a very attractive value proposition as a VC, when your alternative is to invest in the next enterprise SaaS company or software play that is just a lot more capital light. But that has changed, and I think we're seeing more and more deep tech investors. We're seeing more, investors considering hardware plays, especially when they're related to some sort of software angle. And that's where I would kind of bucket AMP in, right? In that context. They're focusing right now on components that actually are physical, products, like a battery management system that goes into vehicles, but their long-term play is really to put the algorithms that are, that you use to compute state of health, state of charge, etc., and that you use to actually manage, to manage the battery utilization, charging, etc., to put that into the cloud and just to become a lot better at A, extending the lifetime, B, reducing the likelihood of any sort of recalls, which are, ridiculously expensive for OEMs. And then C, also increase the number of miles, right, or rides that you can get out of a battery. Yeah. And so I think going back to the broader trend here, I think there's now a lot more interest in this space. I call it definitely the Tesla effect, right? If you look at what happened to Rivian in the recent IPO, that is also the Tesla effect.
Yeah.
That would not have been possible without Tesla. And it's cool to be in the industry, to be honest, right now, because there's so much attention. There's so many new players coming in. There's all these crossover funds, coming in now and spending big money on a lot of these plays. And if we talk climate change and the impacts of electrification on that, obviously that money is much needed, right? So I'm generally pretty excited that the space has attracted so many new players and so much more capital. You still want to be disciplined, in what you want to invest in, though. So because again, that comes with hype cycles. When valuations shoot up, when there's a lot of money choosing and hunting down, few startups, and valuations therefore are driven up. I mean, not all of these companies are going to be successful, right? Not all of the bunch that are already public are going to be successful. And so, for us, that's the role that we have as an investor, is to think about all of these things and place bets where we think it's not just hype, and they can survive even if the hype ends, because it's like a solid and fundamentally valuable and impactful company.